The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the May 8th, the terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day, and let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11, really just past 8 o'clock in the morning. Sorry about that. If you are listening live at 11, thanks so much for doing that. We are recording today's show between 8 and 9, so if you're listening live, I'd love to hear from you. You can give me send me an email at steve@tfnn.com. Inside that subject heading, please put radio show question. Of course, if you're inside the Tiger's Den, any ping will do. And if you are listening at the normal programming time, we'll do what we can to make this as pertinent as we can for that hour. I will not be able to record a show for you tomorrow, but I will be back full in the seat on Monday morning. So let's go ahead and begin our day. Now, I love doing the early show because we've got the futures that are trading, and we're all trying to decipher what the market is communicating to us. So what I'd like to do is, especially when we start off here at 8 o'clock, is take a look at what's going on internationally. But here, we take a look at what's going on right now in the U.S. You've got the equity futures are trading to the upside. S&P futures, the S-mini up 53, 257 for the NASDAQ, 319 for the Dow. Russell's up about 28 points out there. Over in Asia last night, we had a sea of green. Shanghai, Hang Seng, Nikkei, S&P over in Australia. Everything to the upside this morning. We've got the FTSE and the DAX trading the upside. DAX up 1 2/10%, basically 268 points. Gold's off $42. Silver's down 22 cents. Electric crude is up $1. Natural gas is up 8 pennies out there. You've got the U.S. dollar index that's trading up 405 ticks. Now, I've got a 10-minute delay on that, so it's going to be up by just a tad. And the 30-year Treasury down 8 ticks, printing out at 115.04. So let's do this here. We're going to go ahead and switch screens. We're going to go to my one of my white background screens. Change stream here. Change the language on this. Give me a moment here. We're going to take a look at what went on overseas, what it actually means. You know, what do those numbers mean with the Hang Seng, the Nikkei, and the Shanghai moving to the upside? Well, if we take a look at what's going on in Shanghai, it had a TD9 count top that went ahead and formed back on April 23rd. That was negated on May 6th out there. And so price is going to go target its TD9 count breakdown resistance level, 35,362. It's very possible that it's going to go, it's already triggered an A to B equals CD pattern to the upside. So if we can take out that 36,92 level, it's going to go much higher. In the case of the Hang Seng, indicated a TD9 count top on May the 2nd out there. It has an A to B equals CD pattern. It's attained the 1-to-1 level, but it needs a bearish reversal candle to confirm a top. Likely what price is going to do is go target the 24,230.72 level, its TD9 count breakdown resistance area. The Nikkei, it's just a smidgen away from getting to that 37,359 area. That happens to be its TD9 count breakdown area. It also negated a TD9 count top, kind of getting a message here. Internationally, you've got a negated TD9 count top in the Shanghai, the Hang Seng, and the Nikkei. That's important because when we come to the U.S. markets, that's what we're going to look at here. If we take a look at the UK FTSE, it does not have any kind of a topping pattern, and it's likely going to target its breakdown area at 86.71. The DAX is trading above the top of its breakdown area. Now, the DAX just triggered just a few minutes ago bar number 8 of a TD9 count pattern. So tomorrow, although I won't be with you, if you do see a DAX close above the close of bar number 5, that number is 23,344.54. If the DAX closes above that number tomorrow, you'll have a TD9 count top that will actually go ahead and complete on Monday. So you would have a top in the DAX. but it's got to go ahead and form that bar number 9. If it closes below the level that I gave you, the pattern just simply goes away. So that's what's going on internationally. I'm going to go ahead and close these charts down. We'll take us to a blank screen out here, but I've got different data feeds when I take a look at this set of charts. For example, we're going to go over and take a look at the U.S. dollar index in just a moment. Just got to give me a minute to reset this. And because just simply the data feed that I've got for the U.S. dollar index, 10-minute delay though, it makes it difficult during the 11 o'clock show to really kind of switch back and forth. So here we take a look at these are the currency pairs that make up the U.S. dollar index. You've got a 57.6 rate percentage weighting in the euro, 13.6 in the yen, 11.9 in the Great British pound. That's the reason why we really just focus on that set of pairs. We could include the Canadian loonie, we could include the Swiss franc and the krona, Swedish krona out there, but it all that makeup is what's going on inside the U.S. dollar index. And we take a look at the U.S. dollar index, it is nothing more than a consolidation with inside its profile. 98.77 at support, resistance up at the 100.15 level out there. If we take a look at what's going on in the euro, it's got a TD9 count top, kind of a sideways to lower move, maybe targeted its breakout level 109. The Japanese yen, it's got a TD9 count bottom, maybe targeted its breakout level at 147. Now, if both of those accomplish those tasks, they will both weaken and the U.S. dollar index will get stronger. If we take a look at the Great British pound, it does not have a topping pattern. It had a TD9 count top. It got negated. It's got a Rhodes momentum indicator signal, but no bearish reversal candle. But we can see just trading in a sideways consolidation. I believe the Bank of England left the rates. When did they cut rates today? I think they were anticipated to cut rates. The EU planning that. It's not sure. Bank of England cuts interest rates, yeah. So they did cut their interest rate out there. Hasn't been any kind of significant movement in the pound. As you can see, the Swedish krona's got a TD9 count, Rhodes momentum indicator bottom pattern out there. The Swiss franc has got a buy the D point bottom pattern, so that wants to move higher. But we've just got to take a look at the U.S. dollar index. Let's do this here. Let me close out this chart. Let's take a look at the multi-time frame chart so you get even a bigger picture of what's going on inside of the U.S. dollar index. So in a moment here, we'll get to take a look at the monthly and the weekly time frame charts for it as well. Now, in the case of the monthly time frame chart, which is going to be over on the left-hand side out here, we don't have any kind of level of support. So it's possible that if the U.S. dollar index breaks through the bottom of its daily profile and takes out its most recent lows from early part of late April out there, that the U.S. dollar index could be targeting 91.80. That's its TD9 count breakout level. The weekly time frame chart suggesting that's a real possibility as long as price remains below 99.90. 99.90 happens to be the TD9 count breakout support level, and prices closed below that for more than a couple of weeks out here, and we can see that all rallies have run into resistance right there. So I'd say tomorrow, watch that 99.90 level out there. You close back above it, you're inside its profile. Then I'd be watching 100.15 because if we close above that, we're going to rally. Likewise, you're watching to the bottom of its profile, 99.77 out there. So that's what's going on with regard to the U.S. dollar index. Real quickly here, I'll put up the soft commodity charts. Hit those real quickly because I'm going to go ahead and change. I'm going to go ahead and change the data feed. We'll get back from this break here. Give me 1 second. So you got July wheat out here. July wheat's got a TD9 count bottom pattern with price just consolidated with inside its daily profile out here. Nothing much else really for me to report to you on the soft commodities. Steve Rhodes with TFNN. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
Welcome back, folks. So let's do this here. I'm having a couple of technical issues, not the most ideal thing. So let me just get my black background. So it's right now, if we take a look at U.S. equity futures, you've got the S&P up 50 points, Nasdaq's up 246, the Dow's up 293, the ES Mini Russell's up 25. Now we got the ES Mini trading out at 5702. It's been up to 5717 today, another 15 points higher. The Dow, another 100 points higher, been up as high as 41,616 out there. So what we're going to do here is we're going to move off of this set of charts. I'm going to move on to take a look at the daily equity future contract. So kind of debated you just a tad with regard to those TD9 count patterns that have failed over in Asia. And the question tomorrow is going to be my north screen. Nope. Thank you. Thank you, Al. Change this screen here. Stop streaming. Oh, well, sorry about that, folks. Talk about, here you go. Okay. So now we should be back to live. You should be seeing the 4 equity future contracts out here, and that's where we're really going to be paying attention to today and tomorrow's activity. Now, each of these have completed TD9 count topping patterns. If price closes above those highs, so in the case of the ES Mini, jot this down on your pad of paper, 57.2475. You close above that, that gets negated. That tells you we're headed higher. If you're asking me headed higher to where, my answer would be 6,200.75 in the ES Mini. In the case of the NQ, price is able to close today or tomorrow or anytime, really, quite frankly, above 2276.75. It'll negate its TD9 count top. That suggests we go much higher, go back higher to where you're going to go back towards its all-time highs out there. In fact, you could be setting up a pretty large A to B equals CD pad to the upside. In the case of the Dow equity future contract, the number to be paying attention to today, and it's already been tested, is the high is at 41,555. So we have traded above that. Right now we're at 41,509. You close above 41,555, it's going to negate its TD9 count top. That's going to suggest that it wants to make a move up to the 44,494 level. In the case of the Russell 2000, Russell 2000 is taking on its TD9 count top. The high of that pattern is 2034.30. You close above that, the Russell 2000 will set its sights at the 2307.80 level, that being its TD9 count breakdown resistance area. So you want to watch what's going on inside these equity future contracts. We've already gotten signals over in Asia to expect or anticipate that these tops will be broken. I don't know if that's the case or not. but that's the message. Now, when we take a look at this, you've got these TD9 count patterns that we're taking a look at. If I put this my white background screen, my black background screen charts up again, and I move over to this tab here, you're going to see where I've got a bunch of different trend lines, a couple of retracement levels. So if you take a look at the ES Mini, it may look a little bit clustered, but you can see the descending trend line. So you're up against trend line resistance. The 0.68 retracement of that entire move is at about 56.92. Out here, we're trading at 57.04. The same kind of pattern inside the NQ out here. The 0.618 retracement is 22.16. So you close above. Again, you take out the TD9 count top, at least you're going to get up to 0.786 retrace level. I would say you're going to head higher. You can see the resistance area that the Dow equity future contract is taking on. Descending trend line resistance. Same thing inside the Russell 2000. So we're up against some real strong resistance levels. The importance of showing you that is that we do take out these patterns. We're going to take out, in essence, those patterns too. And it's going to discuss or going to share with you a strong upward momentum move. Now, what's the other side of the trade? The other side of the trade is we're just testing those TD9 counts, and they're going to hold here in the U.S. out there, and that the DAX is going to go ahead and form a TD9 count top over the coming days by Monday out there. And then that would go along potentially with, now this is the 97-year seasonal cycle for the S&P 500. The vertical line is where we're at today. So here's where the so-called sell in May cycle comes from, where it tops out typically right around now and moves lower for the next 3 to 4 weeks out there. The typical bottom for sell in May, a lot of times people talk about sell in May, they think it's like toaster history. Well, seasonally speaking, over 97 years, that isn't even close to the case. Instead, what it shows is you get a bottom right around May 24th out there. So that would be, about a 3-week decline before price continues to move to the upside. Chart went down. Well, now what do I do? Well, let's do this here. Let's try to let me stop streaming. Let me start streaming again. Sorry about that, folks. Don't know what the deal is there. That's interesting. There we go. Al, you should have it now. Oh, now it's back. Okay, so you should at least have it now. So we're taking a look, folks, at the, I don't know if you saw it or not, but so let me just repeat. This is the 97-year seasonal cycle for the S&P 500. You can see the vertical horizontal line. It represents where we're at today. You can see we're right near where the so-called sell in May cycle begins, but that sell in May cycle only lasts really just for about 3 weeks out there when it makes a low towards the middle and the last week in May, and then we continue to rally up into the basically into the September timeframe, where we then we make that nice October-ish type low out there. Now, what we can do is we can provide you with a little bit more than that. As we have discussed before, we are in the post-election cycle out there. And the post-election cycle, and the reason why we are very likely in this pattern here is because we made that nice bottom on April 7th, and it ties right out to the 97-year, which basically gives us 25 different touch points, 25 different years to take a look at. In fact, I could turn off 2025 out there. It's not going to change things that much. And you can see we're right near where, we could be. Well, in essence, what we have been doing is going back and forth out here. Now, folks, I had shared with you, hopefully each of you out there, I'm not pulling it up right now, the charts out there, but I reviewed with you for several days. We took a look at the historical patterns back in the 1900s and the tariffs, and it's tariff schmariffs. The whole mantra that's out there in the Financial News Network, it's as if they never looked at history, as if they've never looked at a stock chart out there. And what you and I saw was back in the early in the 1900s, where there's all kinds of tariffs going on out there that, quite frankly, had more impact than they do today, because back then we were all agricultural. And so those tariffs were going up 33%, 50%. It wasn't Smoot-Hawley that identified that marked the top inside of 1929. All that is absolute hogwash that has been presented to us. And now we're actually seeing, that April low play out. Now, anything can happen in these markets out there, but here is the seasonal pattern for the presidential cycle. This actually suggests a little bit of chopping around here, maybe for the next, for the next week or so. So that's a possibility. Before then, price starts to take off, and you typically don't see a top until about the August time frame. if in fact the market decides to continue along with this analog. So just realize you got the two different competing analogs that are out there. Which one is going to take place? Well, we're going to know relatively soon, I would think. And the first thing you're going to be paying attention to are those daily TD9 count tops inside the equity future contract. So let me close that down. We can always come back to that, but I'm just trying to free up some space out here. And let's begin by taking a look at actually our first request, which came in last night. And so if you give me a moment, we'll get out here. So I don't have anything pre-prepped. These charts here are going to populate as. So the first one's going to be Apple, AAPL. And the question is coming in from Robert. And Robert wants to know, can we identify where there might be a good entry point into Apple? Also wants to do the same thing for Merck. So when we take a look at Apple here, Apple on a daily time frame is trading below its oscillator and change line at 199.33. I don't have any kind of a bottoming pattern for you from a daily standpoint for Apple. So maybe this goes on to form a TD9 count bottom pattern, but that won't be until next week sometime out there. So to give you an entry point, what we really need to see on Apple is some kind of daily pattern. Now, the only other possible daily pattern that we could see out here would be a test and rejection of its April 8th swing point. We'll talk about that when we get back from this break.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
And welcome back, folks. Not exactly the music there for the Trader's Ed show, but that's okay. We'll take, is that Basil's music out there? In any event, we're taking a look at Apple here. And by the way, first, thank you so much for joining me early. It's 8:31 in the morning. If you're listening live, I really appreciate it. So many requests. I really am grateful for your presence here. Truly am. I really do mean that. How about, so last night, it was accidental, and I actually, my laptop died. It really didn't die. Stevie killed it. What I mean is I was just walking. I had it just sitting out where it normally is, and one of my toes caught the cord, the power cord. The thing went flying and just basically broke off the screen. It's just hanging on by actually a thread. But you got to so in essence that gave me no device or anything to be able to communicate with the subscribers tomorrow or anything out there, which we could have dealt with. But you gotta love the world today. It's 7:30 at night, when basically 7 o'clock at night when this happens, and but you have to love Amazon. I was able to go on, purchase a laptop, and have it delivered between 4 and 7 this morning. It's here. It's actually here. So I told subscribers, so while I'm on the plane or what have you, just flying up to Georgia, maybe I'll be able to find some time and be able to try to pull all this stuff together. So it's been a frantic fury to try to do that. But anyway, you just gotta love it. At least I do. I mean, can you imagine? I couldn't imagine, but it did. It all. So, anyways, back to Apple out here. So the question really is, where's a buy point on Apple? The one thing you can take a look at out here, Robert, is does price get down to test and reject its swing point, its April 8th swing point? And to do that, it would be a test of it would get down below or at least touch a 190.33. The high is 190.34. 190.33, and reject it with less than 120 million shares. If it does that, that could be a entry point. On a weekly basis, we're trading inside its weekly swing point from April 11th, 675 million shares. Again, we've been through, more than halfway through the trading. We're about 188 million versus 675. So Apple is pulling back with much lighter volume out there. So that's the only thing that I can see right now for you, Robert, with regard to an entry. So watch for that test and or rejection. You also wanted to take a look at Merck. So we're going to switch over to those Merck charts. Now, you're not going to see the daily cadence, those dance steps down at the bottom, just because I can populate this chart much quicker. There's a lot of data there. Now, what you're looking for here is an entry. And I'm going to start with the monthly time frame chart. The monthly time frame chart has a TD9 count pattern, but that pattern was tested last month. It's being tested right now. We're trading below that low. That low, by the way, for Merck on its monthly basis would be 81.04. So that just suggests caution at this stage of the game. The weekly chart is trading below its red oscillator and change line. It's got a Rhodes momentum indicator signal. It's trading into its swing point that has volume. This is the swing point from April the 18th, and that has volume of 69 million shares. We're pulling back so far with 37, so light volume. But if price closes inside that swing point, that says tomorrow if there's a close below 80.02, we closed last night at 79.12. Even if it's with lighter volume, you might get down to test that low. The daily time frame shows that we're trading inside its profile below its red oscillator and change line. It has a buy zone between 77.01 and 77.99. That, in essence, is your entry area out there. But you would definitely close out this trade if price closed below its TD9 count low out here, and that's going to be the price point of 75.96. I'm concerned about the monthly chart and concerned about the weekly chart out there, Robert, although price is pulling back on lighter volume. So that would be your entry area, but I just simply offer caution. I believe you're more of a conservative type of a trader out here. So right now, I'd be very cautious. We're going to switch screens in a moment. We've had a number of questions about natural gas. So Joe wrote in earlier, and I'm going to go over to, and he asked about Boyle specifically. So the reason we're going to switch screens is because this is where I've got some data. And so give me a moment. Hopefully I do this correctly. Just change stream. Ought to work. A little slow. Here we go. Okay. So now you should see in the upper left-hand corner the UNG, the upper right-hand corner the June contract for natural gas. Lower left-hand corner, oil, and the natural gas contract next to it is July. Why is that? We always need to know what the underlying instrument is. And if you're trading oil, which Joe is, its entire set of holdings is the July contract for natural gas. Does that matter that it's the July contract versus the June contract? It does, because it's going to have different profiles, different areas for you to watch and what have you. If you are trading the UNG, it's entirely right now made up of the June contract for natural gas. So here I'm going to answer your question with regard to oil. What are we looking at? Well, not so much oil that you're looking at. You're really looking at what's going on the underlying instrument. That's the July contract. So I want you to focus on the July contract out for natural gas, Joe. And what you're going to see is that today is going to become bar number 9 of a TD9 count. If at any point in time, today or tomorrow, price ticks above 4.075, that's going to trigger a TD9 count. That may trigger a TD9 count. What I mean by that is price today also has to close above $3.95. So I hope you wrote those numbers down on your pad of paper. So, and if it does close above that, then you get a TD9 count pattern today. The question is a TD9 count topping pattern. Only becomes a topping pattern if we get the TD9 count and we tick above the high 4.075, the high from back on what is that trading day? Give me a moment here. That was a trading day of May the 5th out there. So what you're really pulling for, even though you're long here, is you don't want to see that price tick above that. You don't want to see it tick above it today or tomorrow out there. But if it does, you're going to get a TD9 count top. That's going to suggest that price will pull back to support. So the question is, at that stage, are we trading above profile resistance? That would be the first level of support. That number is at 4.001 for the July contract. Below that, you'd be looking at somewhere between 363 and 371 as a pullback target area. Now, I'll stay with natural gas for the June contract because this is going to affect UNG. We're not really too interested in UNG and in analyzing that. We're interested in the underlying instrument. So it's going to form bar number 9 today as long as price closes above. So you write this down on your pad of paper, $3.63. We're at $3.70 right now. If we close above $3.63, we'll get to bar number 9. If we tick above the bar number 6 out there, that high is 3.747, then that would trigger a TD9 count top. So whether that happens today or tomorrow, those are the things to be watching for. If in fact that unfolds, you're going to get a topping pattern that's going to suggest a pullback. Now, if you take a look at the June contract for natural gas, you can see its profile is much lower. Right? We're taking our profile resistance in the July contract for natural gas out there. So its target to the downside, it being June, would be right around the 340 level, and below that would be 3.253. So that's what's going on. We take a look at natural gas. Now, we come back from this break, I'll have the intraday chart set up, and this will be for Dan inside the Tigers Den, who's looking at a 30-minute time frame chart and trying to sell the D-point pattern. So we're going to take a look at that for him. Steve Rhodes with TFNN. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. If you were with us yesterday, we looked at the 30-minute time frame chart for natural gas, the June contract. We were taking a look at the A to B equals CD pattern that was potentially forming. That's the first one. I've got 2 different A to B equals CD patterns. So that's the first one that had a price objective of about $3.67. We can see that price when it hit that area, it formed a 3-river evening star pattern at 7:30. That was Dan's signal to go ahead and take a short position. However, and I don't know if Dan had these market profiles, and so the market profiles, doesn't matter what time frame it is we use, they work the same way out there, and you're really watching. So, you know, if you're going to short something, you want to be able to see it break through support. Well, where's support? Well, one of the levels that we would be using is those task market profiles. You can see that here we get that topping signal, but price is trading inside a bullish structured 30-minute profile. What does price do that very next a half hour at 8 o'clock? Price gets down to test the buy zone. The buy zone, because so the top of the profile is where sellers, the bottom is where buyers are at. The center is where buyers and sellers believe there's fair value. So there's an equal number of buyers and sellers in there. When that's closer to the bottom, that gives us a bullish structured profile. More buyers exist between 364 and 363 than anywhere else within inside that profile. Now we're trading, so that held the support. We're trading above profile resistance. We're trading above its oscillator and change line. We have to close above the top of the evening star pattern. That's at $3.68, 36.88. We closed at 3689. So that pattern has been negated. That was at the 8:30 close. So that then sets up the new A to B equals CD pattern. And that would get us up towards the 377 level. Again, but you really want to be able to have access to these profile areas. Look, from my standpoint, they just simply give us a competitive edge. And as far as I know, having a competitive edge is a really good thing. So the more important data points with regard to natural gas for both June and July are what we shared with during that last segment. Obviously, I'm not going to go through that at this moment in time. So that's what you really want to be watching to get the bigger picture out there. So let's get back to some of the requests that have come in. Joe wanted to look at NVIDIA. So if we get, I know many of our listeners want to take a look at NVIDIA. So let's go ahead and see what it is doing. Came back, I guess, late in the day yesterday. I think this thing is just really, so it's got bottoms for the daily and the weekly time frame out there. That you and I have taken a look at ad nauseum. It actually completed a TD9 count top for its daily time frame yesterday. So, Joe, you're asking where's resistance? Well, you're going to have 2 resistance levels. First is going to be yesterday's high. Yesterday's high is 117.68. Where are we trading in the pre-market? Let me put this. This could be dangerous for me to do this, but I'm going to do it anyways. I like to live dangerously, smartly, but dangerously. No, just kidding. So we take a look at NVIDIA. You got 118.57 is where you're trading right now. So give me a second here. 118.57, and yesterday's high was, it's above that. So you're at 117.68. So if we close above yesterday's high, it negates the TD9 count top. But Joe smartly asked, where's the next resistance level? 118.84. That's a TD9 count breakdown area. That's where NVIDIA has to close above. If it closes above that, then it will also close or start trading above its weekly oscillator and change line. And if it's able to close above that tomorrow, which right now is printed at 118.45, you'll see it move to 128.20. That's the top of the weekly profile. So, Joe, I hope that answers your question for you. And just got to wait to see how the day plays out. Brent writes in. He's in Martinez, California. He's up. He's the early bird catching the worm. That's for sure. And wants to take a look at BGS. And the question is, has this bottom? Well, yesterday was quite a move to the downside. So what do we see here? I'm going to start with the monthly time frame. Monthly time frame, I see a wave number 7 letter that's been triggered. That needs a lower high to confirm a bottom. It also could use a bullish reversal candle to confirm a bottom. Rhodes momentum indicator signal also trigger. The same on the weekly time frame. I see wave number 7 that needs a higher low, so that can't take place until next Friday. Bullish reversal candle would confirm a Rhodes momentum indicator bottom. I got an A to B equals CD pattern, but let me open up the daily time frame chart. I'm just looking at what might be the small pattern. Yeah, pretty much am. So this takeout yesterday, Brent, it took out the TD9 count bottom from February 10th out there. So I do have a wave number 7 signal. So you got on the daily, the weekly, and the monthly. If today you don't poke below yesterday's low, which was 430, you would get on a daily basis wave number 7. That's the only thing that I see out there. But man, these stock charts look pretty ugly, daily, weekly, and monthly. But it's wave number 7 time for BGS. Brent, thanks so much for writing in, and I hope that helps you out. Hector and Patty want to take an OSIS, and they really want to take a look at the A to B equals CD pattern. So for that, we're going to switch over to Stevie's black background chart, just simply because I've got the A to B equals CD tool on this system here. As we take a look at OSIS, first, let me share with you that price is trading above the top of its monthly profile. That number out there is at 210.98, so that's a bullish signal. We're trading above the top of the weekly profile. That's at 213.08. That is a bullish signal, and we are trading above the top of its daily profile, which is at 205.77. What we did last week on a daily basis, we went ahead and confirmed an A to B equals CD pattern to the upside. Even though I had that drawn in there, Steve is going to have to draw it again. So what I would be selecting here is the A point would be the low from right back here on the trading day of October 28th. So let's get the tool engaged out here. Let's just click on that. And that's going to be our A point for the daily time frame, A to B equals CD pattern. The B point, easy to identify. That's going to be the high from February 9th. And the C point, very easy because it's the next lowest low that takes place after that. And that is on March the 13th out there. So your 1-1, by the way, the B point had volume out here, Hector and Patty. You probably already know it's 188,000 shares. That was passed with that nice gap to the upside with 683,000 shares. So you've got a confirmed AB equals CD pattern to the upside. The price projection is 243.56 out there. Now, I know what Hector and Patty would like me to also do would be to decipher the weekly time frame chart and try to come up with an A to B equals CD pattern to the upside. Man, there's so many different A to B equals CD patterns, really kind of hard to do. And we really use that as a price projection tool. Now, we can also use that as a topping pattern, sell the D point out there. But the first thing you've got to see is some type of bearish reversal candle. And we don't have that. So I'd say that at this stage here, you're headed to 243.56. If you can get above that, that's just the 1-to-1 A to B equals CD. So that's the one that I would stick with. You could be looking at 268.09. So that's BGS. We take a look at the black background charts. But out of curiosity, we take a look at I'm sorry, that was BGS. That was OSIS. Let's put OSIS on my white background charts and just OSIS. There we go. And let's just see if there's anything else here that Hector and Patty need to be aware of. It turns out there is. Okay, so regardless of the A to B equals CD pattern, we looked at on the daily time frame, we've got a TD9 count top that's in place. So in order for that A to B equals CD pattern to come to fruition, price got to take out the high from May the 2nd. That's the TD9 count top, and that's at 227.34. So although the weekly looks good, They negated a TD Rhodes Momentum Indicator top last week. The monthly looks good out here. It's that daily TD9 count top that you're dealing with. It's irrespective, if that's a word, of the A to B equals CD pattern out there. So price could be pulling back to test its oscillator and change on. That's around 212.76 out there. So Hector and Patty, hope that helps you out. We got to get through a couple of quick ones out here. BX out here for Nicholas, AXP for Nicholas, and Robert says, where do you enter, take a long position in the market? Steve, I'll see if we can do all that in 10 minutes. We'll be right back.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Welcome back, folks. So we're taking a look at the BX. This is Blackstone. This is for Nicholas, who's looking for a long trade. So you got a definite daily and weekly bottom pattern out there, and monthly, quite frankly. Daily's got the Rhodes Momentum Indicator bottom. Price is struggling to take out its bottom of its profile. That's 139.40. The weekly's got a TD9 count bottom. It's also struggling to get inside profile. Resists up at 139.82. So you're looking for an entry point. I'd say the better entry point would be if price could pull back to its oscillator and change on the daily time frame, right around the 129.65 level. Do realize that price has been unable to get above those key resistance levels on the daily and the weekly time frames. I hope that helps you out, Nicholas. Let's take a look at the next request out here, which was to take a look at American Express for you. Again, you're looking for an entry point here on American Express. What you're going to probably have to do is wait for a 2 to 3 day pullback out there. Price is trading above profile in its daily time frame. You are trading the profile resistance on the weekly. So if it does not close above 281.41 come tomorrow, price may pull back. The buy level would be between 266.96 and 269.40. So that's what I see there. The next question that came in was from Robert. Where do you enter in these markets to take a long position? He would like to try to take a long position here. Well, the first thing that I would wait for, oh, darn, didn't mean to go there. Not that we can't, but the first thing that I would wait for is to see if these TD9 count tops get taken out, Robert. So we took a look at that on the equity future contracts. You've got the numbers on that. Each of these have TD9 counts. If those get taken out, it means we close above them. Then what I would probably wait for, if you look at the very bottom portion of the screen here, the actual dance steps, the actual cadence of the markets, then the buy point here from a daily standpoint would be on a 2-day retracement. You would buy it on a 2-day retracement. The only other option that I could come up with for you would be some type of intraday bottoming pattern, in the ES or the NQ, along the 30-minute time frame, a TD9 count bottom, something along those lines out there. So folks, thanks so much for joining me on Terrific Thursday. Again, I won't be present with you tomorrow, but I'll thinking about you, that's for sure. But I'll be back with you in the seat here on Monday. So have a terrific Thursday, a fantastic Friday, a wonderful weekend, and I'll see you on Marvelous Monday. Take care. Be safe out there.